Here's something most people completely miss about truck driving. Everyone knows truckers make decent money. What nobody talks about is how different that money looks at every single level. And more importantly, what it actually costs to reach each one. Because the gap between a first-year company driver and an owner-operator running his own routes is not just a salary difference. It's a completely different financial life. And the path between them has some traps that end careers before they really start. Let's go through every level. Real numbers, real costs. What the money actually looks like after everything comes out.
Before any money comes in, money goes out. That's the first thing nobody tells you clearly enough about trucking. A commercial driver's license, CDL, costs between $3,000 and $10,000 depending on where you get it and how you get it. Private trucking schools on the higher end, community college programs on the lower end. Some company-sponsored programs will pay for your CDL entirely, but there's always a catch attached to that, and the catch matters financially more than most new drivers realize. Company-sponsored CDL programs typically require you to work for that company for 12 to 24 months after getting licensed. If you leave before the contract is up, you pay back the training cost, sometimes in full, sometimes prorated. Either way, you're locked in at whatever starting wage they offer with very limited negotiation power for up to 2 years. The CDL is free. The freedom costs you something else.
The people who come out of this entry stage in the best financial position are the ones who used a community college program, kept the cost under $5,000, got their CDL independently, and then shopped multiple companies for the best starting offer. That small difference in how you enter the industry can mean $8,000 to $15,000 difference in your first 2 years of earnings. Most 21-year-olds getting into trucking don't think about that. They just take the sponsored program because it feels like the easiest path in. Level 1, company driver, first year. Starting salary for a first-year company truck driver in 2026 sits between $45,000 and $58,000 annually, depending on the company, the route type, and the region. That sounds solid. And it is, until you understand how trucking pay actually works. Most company drivers are paid per mile, not per hour. The national average for a first-year driver is somewhere around 50 to 55 cents per mile.
Sounds simple. Here's where it gets complicated. You only get paid for miles driven, not for the hours you spend waiting at a loading dock, not for the time spent on paperwork, pre-trip inspections, or sitting in traffic, not for mandatory rest periods. Federal regulations require truckers to rest after a certain number of driving hours, which is the right call for safety, but those hours don't generate income. The result is that a trucker who technically works 60 to 70 hours a week might only get paid for 45 to 50 of them. When you do that math on an hourly basis, the first-year salary that looked like $50,000 starts feeling more like $16 to $18 per hour in real terms. Not terrible, but not what the recruiting brochure implied either. Expenses at this level are relatively low compared to later stages because the company handles the truck, the insurance, the fuel, and most of the logistics.
Your main costs are food on the road, which adds up fast if you're not careful, and whatever you're paying on the CDL loan if you financed your training independently. After taxes, a first-year company driver in most states is taking home somewhere between $3,000 and $3,800 per month. Livable. Definitely not get-rich territory, but this level is about building hours, building your record, and understanding the industry before you make bigger financial moves. Level 2, experienced company driver, 2 to 4 years in, clean record, consistent performance. This is where company driving starts to actually make sense financially. Pay at this level jumps to 60 to 70 cents per mile at most major carriers. Annual earnings land between $65,000 and $80,000 for drivers running consistent miles. Some specialized routes, hazmat, oversized loads, refrigerated freight, pay even more. Hazmat certified drivers can add $5,000 to $10,000 per year on top of base mileage pay just for carrying the endorsement.
The financial picture here is genuinely solid if you manage it right.
Take home after taxes on $70,000 in most states is approximately $4,200 to $4,800 per month. A driver who keeps their personal expenses controlled at this stage, no oversized car payment, modest housing, not eating every meal at truck stop diners, can realistically save $1,000 to $1,500 per month. Over 2 years, that's $24,000 to $36,000. That number matters because it's the foundation for the next move. Most drivers who get stuck at this level forever made one specific mistake. They upgraded their lifestyle every time their pay went up. New truck for the personal vehicle, bigger apartment, more going out. The income went up, the savings rate stayed at 0, and the financial position at year 4 looks almost identical to year 1. The money moved through their hands instead of building anything. Level 3, owner-operator.
This is the level that gets talked about the most in trucking circles. Owner-operator. Your truck, your routes, your business. And the income jump looks incredible on the surface. Gross revenue for an owner-operator averages between $150,000 and $250,000 per year, depending on the freight market, routes, and how many miles they run. Before you get excited about those numbers, let's talk about what comes out of them, because this is where trucking's financial reality gets genuinely complicated and where a lot of drivers make decisions that hurt them for years. First, the truck. A new semi-truck in 2026 costs between $150,000 and $250,000. Used trucks with reasonable miles run $60,000 to $100,000. Either way, you're financing a significant asset, and the monthly payment on that financing is typically $2,000 to $3,500 depending on the loan terms and down payment. That payment exists whether you're running full loads or sitting empty waiting for freight.
Fuel is the other number that shocks first-time owner-operators. An 18-wheeler gets roughly 6 to 8 miles per gallon, 880 per gallon nationally. A driver running 10,000 miles per month is spending approximately $5,000 to $6,300 on fuel alone per month. That's before touching any other expense. Then insurance. Commercial truck insurance for an owner-operator runs $12,000 to $18,000 per year. Maintenance and unexpected repairs on a truck running hard miles budget another $15,000 to $25,000 annually. Permits, registrations, IFTA fuel taxes, and various compliance costs add several thousand more. When you run all of those numbers honestly, a gross revenue of $180,000 per year as an owner-operator typically produces net income, actual profit, of $60,000 to $90,000, which is better than the experienced company driver, but it's not 3 times better, which is what the gross revenue number implied. And it comes with significantly more risk, more administrative work, and 0 paid time off.
The owner-operators who actually build wealth at this level are the ones who treat the business like a business from day one. Separate business bank account, quarterly tax payments to avoid IRS penalties, maintenance funds set aside every month before touching profit, emergency fund covering at least 3 months of fixed costs. Most owner-operators who fail financially don't fail because freight dried up. They fail because they ran the business like a paycheck instead of like a company. Level 4, leased authority and small fleet. This is the level most trucking content never covers, and it's where the real wealth building actually starts in this industry. Some experienced owner-operators take their established operation and begin leasing their truck and authority to other drivers, essentially becoming a small carrier rather than just a driver. 1 truck becomes 2, 2 becomes 4. The owner is now generating revenue from assets and other people's labor, not just from their own driving hours. The financial model shifts completely at this stage. A truck leased to a qualified driver generates $3,000 to $6,000 per month in net profit for the owner, after covering the truck payment, insurance, and maintenance. 2 trucks doing that is $6,000 to $12,000 per month in passive income, alongside whatever the owner is still earning from their own driving. 4 trucks starts looking like a real business with real income diversification. The barrier to this level is capital and management skill. Acquiring additional trucks requires either cash reserves or strong credit and business credit history.
Managing drivers requires understanding contracts, compliance, and how to handle the inevitable situations where a driver damages a truck or abandons a load in an inconvenient location. This isn't passive income in the easy sense. It's business ownership income, which is earned through systems and decisions rather than just driving hours. The owner-operators who reach this level successfully almost always followed the same financial path.
They kept personal expenses extremely controlled during the single truck years. They built cash reserves aggressively. They treated credit as a tool to be managed carefully rather than a resource to be used immediately. And when the opportunity to expand came, they had the financial position to act on it rather than watching it pass. Level 5, fleet owner. Full fleet ownership. 10, 20, 50 trucks operating under your authority. At this level, trucking stops being a career and becomes an asset class. Revenue scales with the size of the fleet. A well-run fleet of 15 trucks generating $4,000 per truck per month in net profit is $60,000 per month, $720,000 per year, from a business that started with one CDL and one company driving job. This level exists. Real people reach it. But the honest number is that fewer than 1% of people who start trucking ever build to this scale. Not because it's impossible, because every level between entry and here requires specific financial decisions made correctly. And most people make at least one major mistake somewhere in the chain that slows or stops the progression. The ones who make it aren't necessarily the best drivers. They're the ones who understood at every level exactly what the money was doing, where it was going, and what needed to happen with it to create the next move. What the money actually teaches you. Here's the thing about trucking that I find genuinely interesting from a financial perspective. It's one of the few industries in America where you can enter with a few $1,000s of training, no college degree, and a willingness to work uncomfortable hours, and within 10 to 15 years be running a multi-million-dollar operation if you make the right calls with the money at every stage.
The industry doesn't discriminate based on where you went to school or who you know. It discriminates based on your driving record, your financial management, and your decision-making under pressure. Those are things you can actually control. The drivers who stay at level 1 for 20 years and the drivers who build fleets started in the same seat, same truck, same roads. The difference was never the driving. It was always the money decisions made between the miles.